Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. Over the last few months, prices utilized the medium moving average, currently 82.97, which is highlighted in mauve on my daily chart, as a sort of a base to push and test higher. However, the top side has been capped, well, sort of, by three separate, though not necessarily unrelated, resistances. The first was the April 2012 high at 86.65. This had been breached in late December 2023, but we only had the single close over it. This brings me to the second resistance, the extension to the upper trend line of the June to August 2023 ascending triangle, currently at 87.49, which is highlighted on my daily chart in dark blue. This has not been tested, but it is still there, and it relates to the April 2012 high, as it was created by the overflow in June and July last year over the same April 2012 resistance. The third resistance is unrelated. It is the purple colored neckline on my daily chart of the February to April 2023 head and shoulders continuation pattern, currently at 86.18. This was likewise penetrated in late December last year, the same as the April 2012 high, but again only had the single close above it, and more recently, due to its declining angle, has helped cap the last 2 weeks, with again only a single close last week over this resistance. The key element last week was this capping and subsequent fall down through the 50% Fibonacci line of the October 2020 to March 2022 move at 85.56. And then this week started to tackle the congestion between 83.46 to 84.40. This congestion includes the following: the September 2012 high at 84.24, the February 2013 high at 83.50, and the flatlining long moving average, currently 83.46. So where does that leave us, apart from being in between the seemingly significant mauve highlighted medium moving average below, currently 82.97, and more on this moving average shortly, and the various resistances above? Well, we have the opportunity for two possible pathways leading to two possible patterns. In the first, we could look at the action since the lows in October last year to date as a possible bullish halfway hesitation. It is a ragged pattern and a little too long in duration for my liking, but it could become that if prices punch higher and up through the resistances, which, to be obvious, doesn't look too likely right now. The second and increasingly interesting opportunity is to look at the action since mid-November 2023 today as a possible head and shoulders pattern in construction, with the medium moving average, yes, here it shows up again, acting as a de facto neckline, though I have also drawn a bright red neckline, currently at 82.49, a little lower than the medium moving average to help aid matters. This is all possible, but if it is, then we are towards the final stages of construction of the second shoulder right now, and prices need to drop back down to that neckline zone, at least to fully build the pattern. As an addendum, we might be forming some other patterns such as a declining triangle since late last year, but it's way too early to say if this is an option. So, we seem to be closer to this head and shoulders pattern than to anything. This will then prompt the question, is it a topping action or a continuation action? And for that, we'll have to watch carefully as to what happens at the medium moving average. LME 3-month aluminium. there was a lot going on here last week, and I've made it, I think, even more complicated today. To start with, we have the gapping move higher in December last year that led to the monthly key reversal up, for bullish halfway hesitation in the middle of the rise, and a horn top at the end of the rally. Then there was a subsequent drop, which was halted at the October 22 base support down at 2156. This in turn led to a rise started 2 weeks ago, up through the necklines of a pair of reverse head and shoulders continuation patterns. One from February to April 2023 move, currently at 2224, highlighted in bright red on my daily chart. And one from June to July 2023 move, currently at 2258, highlighted in bright green on my daily chart. Last week, the rise topped out at a third neckline, coloured in purple, of the October 2022 to May 2023 head and shoulders top pattern. And midweek last week saw a rejection of the bullish incentive and a drop down to where we are now. Well, we were sitting in between the short, medium and medium moving averages, currently at 2230 and 2231 respectively, and the bright red neckline, but we seem to be moving higher up at the moment. So of all these moves, where does that leave us now? Well, last week I said, and I quote, there is one pattern that has just completed its construction late last week, and unusually, all elements are in the right order. Last Thursday, and this is 2 Thursdays ago, the market made a bow tie formation of the declining short moving average, currently 2221, the very slowly rising medium moving average, currently 2231, and the more or less flattening short medium moving average, that's currently at 2230. As I said earlier, the moving averages went into the bow tie in the right order and have exited more or less in the right order. However, there is no clear direction from the moving averages. This makes the immediate impact of the bow tie crossover difficult to interpret. Is it bearish or bullish? As I say, the immediate answer is unclear. However, we can look at the longer term process for this bow tie formation. Thus, the theory goes that between 15 to 20 sessions after the crossover, the market will see volatility and, in theory, move in the direction of the moving averages, assuming they become clearer by then. Thus, I would suggest paying close attention to what happens here between the 15th and the 22nd of February, as it may indicate the next significant direction, and that's the end of the long quote. This all still stands true and relevant, but over this last week, another pattern started to develop in my mind, and I've drawn it unhighlighted on my daily chart. It is a late October 2023 to date possible potential diamond pattern. It is not a pretty pattern, but I would pay close attention to the converging trend lines for this pattern, which are currently at 2172 to 2277. Now, I am not in love with this pattern. I will retire if it does not perform, but it does have merit and is one to watch. LME 3-month lead. In mid-November 2023, the market reached its zenith at the same high we saw back in August last year, just over 2300, before turning around and dropping even faster back to new lows not seen since June 2023, and in the process leaving behind a V-top, and that's to complement the earlier V-bottom seen in October last year. This time with a substantial extension from early December last year until 2 weeks ago. This extension ended up being a bull channel, currently at 2072 to 2144, which is highlighted in dark blue on my daily chart. I said back some 8 weeks ago, and I quote, we have some mild congestion from October, so that's October 2023. We have some mild congestion from October in the 2090 area, but we really don't have that much resistance above until we start approaching the moving averages. Obviously, the flatlining long moving average first, well, that's currently at 2124, as well as the interesting 50% Fibonacci line of the March 2020 to March 2022 move at 2135, and that's the end of the quote. Interestingly, it was the crossover combination of all these moving averages, plus the 50% Fibonacci line at 2135, and also the upper bull channel line, currently 2144, that was at the same time a cusp in the market, and one of its highest combined resistance levels that saw prices punch up through all those resistances and hold station over the next 50% Fibonacci line above. the November-December 2023 move at 21.62. The next resistance above and another possible holding level was the lower trendline extension, currently at 21.99, of the May to June 2021 descending triangle pattern. This trendline extension helped cap the market, this time with assistance from the congestion at 21.86, much as it did in June last year, as well as July and part of November. Interestingly, on the fast recent move lower, the drop, late last November, well, it didn't even register then. So whilst I'm still happy it capped prices over the last 2 weeks, I am still cautious about being a strong resistance. Anyway, as I said last week, and I quote, I even have a sneaking suspicion that prices may turn around and move back down into the broken bull channel. We'll have to wait and see, end of quote. Well, we have seen, and prices have indeed dropped back into the bull channel, the broken bull channel, punching down through all the moving averages. But today, sitting above the short medium moving average, currently 21.07, and the lesser Fibonacci line at 21.12. And 2, maybe 3 questions have popped into my mind this week when studying the daily chart. Now, the first is a fairly obvious opportunity for the action from mid-November last year to date to be a very large bearish halfway hesitation. If this is happening, then it is still under construction, and the key levels to watch are what happens at the lower bull channel line, currently at 2072, and the December 2023 low at 2016, if it gets down that far. The second is a really big picture question, and it is whether the whole action since May last year is a huge big M pattern, big M top. This is such a big question that the previous idea of a bearish halfway hesitation may actually make up an integral part of it. Hence, I will just bear this question in mind. Finally, the third question is a related question to number 2, though a little smaller in scale. So whether we have a large double top, even atom type, formed between July to December last year. The answer to this will very much depend on what happens at the neckline, currently at 20.02, should prices get down that far.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.